right. Hey, good morning. Okay, good morning. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. Holy smokes, 20K. Hey, this is a small boutique industry. That's a lot of people. I stink. Well, without further ado, welcome. Thank you for being a subscriber. We gather here today to conduct technical and fundamental analysis with the overriding goal of trade planning. Let me remind you that even if you plan your trades, even if you have great fundamental and technical analysis, you can be wrong. Therefore, trading is risky and not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, you might remember when I was on Fox Business many years ago, I think around the 2008 financial crisis, one of the things I talked about is you could have really good fundamentals, and I talked about it. You could have this, you could have that, you could have this, you could have that, and you have all of this, and it all totally makes sense. And you can still be wrong. But it's a good place to start. If you're going to be wrong, at least be wrong with good intelligence, right? So anyways, hey, my name is Wayne. I've been trading currencies a long time. I love it. It's awesome. It's way better than everything else as far as trading's concerned, but even as other businesses, right? I'm an entrepreneur. I look at this as a small business. When I was a venture capitalist, I looked at hundreds, probably thousands of business models. I've looked at hundreds of patents. All really good ideas. They're all really good, valid ideas. Nothing comes close to Forex. So, well, if you take my experience, if you will, you can stop looking for something better and you can double down, triple down on Forex. It's better than trading options, better than trading futures, better than trading the stock market, better than just trading, commodities directly. There's all kinds of ways to make money. One of the great moments of my life was sitting in a room with hundreds of professional traders. It was a hedge fund industry only kind of thing. And I remember looking around the room going, everybody here makes money. And we all do something different, but we all make money. And I really like that. There was high frequency traders and, obviously long short stock hedge funds. I had lunch with a guy and I'm like, hey, what do you do? And he's like, merger arbitrage. And I'm like, merger arbitrage? I remember thinking, I couldn't do that. And then he's like, what do you do? Oh, I'm a foreign exchange trader. And he's like, I could never do that. I'm like, good. You do you, me do me. Right? So anyways, it's really fascinating. But in my humble opinion, I'd much rather be a foreign exchange trader than a merger arbitrage trader. Shorting that Twitter stock, hoping that Elon doesn't buy it. Anywho, so welcome. Let me know what's on your mind. Let me know how I can help. I am a servant here. That's how I look at myself, as I'm a servant in this hour of power. So I want to know what you need. And the best way for you is to be somewhat assertive, polite, but assertive, and let me know how I can help. And if I can't help you, there are people that are a part of this community that have been, hanging around me, part of my crew for many years, over, more than a decade. Right, Peter? Peter can help. He's got skills. He knows what's up. So there's lots of, look at all the people in this room. I've known most of you guys for a very, very long time. So if you're new and I don't get to your question, holy smokes, I'm not alone, you're not alone, and as a community, we make each other better. Right? Right, Barry? You like cooking, Barry? Anyways, let me know how it can help. There are many resources. If you look at the description below, there's a link to my book. There's a link to FXBootcamp.com, which is a community I started almost 20 years ago to help retail Forex traders get their Forex on. Really? You hate cooking? You know, if I get in a bad mood, Barry, I'd probably think of cooking as one way, right? It's a good use of, like, I'll give you an example. I think it was Friday. I just wanted a barbecue, so I got a prime New York strip, and it was like butter because I cooked it in butter. I cooked it on the grill, but I got my Le Creuset grilling pan, which is enameled cast iron, and it's got the grids on it, right? So I got that smoking hot and threw down clarified butter. Oh man, it was great with some seasoning on that steak, salt and pepper, not much else, and just cooked it that French style. And it was like butter. Then the next day, I didn't feel like cooking, so I ordered the Outback Steakhouse special and got one of their big bone-on ribeyes, and it was good. Don't get me wrong. It was a fine steak. Not great. It was fine. But nothing like that prime that I cooked. So anyways, anywho. But both made me happy. So anyways, there's a link to fxbootcamp.com. It's $88 a year as a starting point. That's just training videos, only 65 hours. And if you go through those 65 hours, you're like, holy smokes, that was worth $1,000. This FX Bootcamp is amazing. And by the way, that's how you're going to think about it. Then I'm going to entice you to join one of the live trading groups where you can work with fellow traders working on the same skills that you're trying to work on. So you get like-minded individuals, and we're a serious crew. We like to have fun, but we're a serious crew. And I think you're going to like the people you're hanging with. So that's my business model. I'm going to give you $1,000 worth of value for $88, and then you're going to upgrade your account to a whopping $99 a month, and you're going to be around really good people. There's also a link to tradersway.com, an ethical and trustworthy foreign exchange broker. You're going to need a service provider like that provides that kind of service. They're just better than everybody else. Is that blunt enough? They earned my loyalty and respect through their actions when other brokers went out of business, presumably because they were not ethical and trustworthy. Trader's Way was perfectly fine, and I'm like, oh my God, Becky, look at this broker. Okay? They earn my loyalty and respect through their action, not a promise, and not a, hey, we're the cheapest on the planet advertisement, which would make me run, actually. Okay? So check them out, tradersway.com. Here he is with the stock market. We had that dip the other day, and we're back there. We're just tickling. Oh, wait, that's Nikkei. Sorry, that's Nikkei. Forgot that we were looking at Nikkei. Nikkei's been doing well, maybe making a higher high today. What do you think? That's the Japanese stock market, which makes sense because I was looking at this. Look at that. We went up. We tickled that 0.25. Yield curve control kicked in. Okay, you got to know your YCC. Okay, hit 25, hit 25, hit 25, hit 25, hit 25. And then we've dropped last week last week we dropped way low. And maybe we're on a new trend, eh? Okay. Sky Killer says, could we go along the new fundamentals that are coming out, like less inflation in Canada? Well, we hit that, back in June, July period, we hit what we considered peak inflation. It's not really the question, but for some people it's the question. I think the real question is peak interest rates. Okay? So it'll change, maybe peak inflation will create a change in the velocity of interest rate hikes, which is positive. But the next thing is, what is the terminal rate? So that's the real question. So has inflation come down enough in various countries for them to stop raising interest rates? No. Has it come down enough for them to slow the rate of which they're raising interest rates? Maybe. Okay. Cool. But with Japan, so I was just reading the July 22 outlook for their economy, and the Bank of Japan is actually fairly bullish on their economy. They're pretty happy, actually. Richard says, hey, so you think they will go so far as raise rates by 3.5 and hold? Well, you don't have to ask my opinion. Those are facts. So again, in the day trading group, one thing that I've asked people to watch every day is that question, but it's not an opinion. Oh, I hate those ads that Google do now. They do them delayed. Do you notice that? Anyways, now I got to go back. They're tricky, huh? Google's trying to make more money by tricking people. Anywho, okay, you got to go out to here, and you got to watch the change here. So, a question is, that Richard says, do you think they'll raise rates to 3.5 and hold? Once again, what I think is irrelevant, what the market is pricing in is relevant. So you could say right here is the mean of the distribution, and the answer is 3.75. But there's a bit of a skew to this, and you want to look at the tails. Okay? And so there's a bit here and a bit here. So you could say, yeah, it could be 3.5. It could be 4. Okay? With right now, most people thinking somewhere between 3.5 and 3.75. Again, by thinking, they're actually negotiating deals. This is smart money negotiating hundreds of billions of dollars. The other thing you want to watch is how this changes over time, and especially as we add more future contracts, to see if it stays there. And we don't really have that information now. What was being priced in several months ago was this idea that interest rates rise, we hit 3.75, and then fall to maybe something like this. From, let's say from 1% to 4% to 2.5. Okay? What I think is now what the market is coming to terms with is something more like up, and something more like that. Okay? So peak created this gap. Peak inflation created this gap. Okay? But persistency is creating this gap. Which means the Fed's not going to save you. Darko nailed 3,000 pips Awesome, dude. What does that mean, Darko? You accumulated $3 or $30 in oil trades? Well, 3,000 what? So I'm assuming that's I'm assuming that's $30. So you made $1 in oil 30 times, or $3 on oil 10 times, is how I'm translating that. Right, okay, 3,000 USD on mini lots would be $30. Which is pretty good if it just bounced from 90 to 95 to 90 to 95 to 90 to 95. Great. Okay. Now, if you did that on $3 worth of moves, then you're over leveraged. But nonetheless, enjoy the money. So anyways, going back to Rich's stuff, there you go. Do I think? What I think is I want to know what the market is actually doing. Okay? And you're supposed to be doing that really on a daily basis. Okay? Take a look at that my WTI. If we go back on an hourly trade, okay, we had this up. And what I did, I think this was the day trading group. I went resistance, 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 resistance. And I'm like, there's a lot of resistance up in there. And then we got that reversal pattern, brought it all the way down. You can also see that we've highlighted the bottom, and there's been a bounce off the bottom. And now you'll see that we're at this gray zone. And that's like the next part of the trade analysis that I've been working, with the day trading group. And so now the big question, this is actually the question posed when we were up here, okay? And then the down, okay, was this part. Let's do this one in blue. If we get something like that, then is there a change in direction, a change in trend? Is there a point in which we start doing that? Okay, Darko, you made $2 in oil and then $3,000 in profit. Holy smokes! Yeah, you're doing what? That's more than a standard contract. That would be probably significantly over leveraged. Be careful, buddy. Now, if you have 20 trades to do it, that's different. But if you're doing one trade at a time, be careful. Yeah, be careful, dude. I mean, think of it. If you had $100,000 in cash and you made $3,000 profit today, then you're up 3% in one day. But 3% is supposed to be a decent month. Okay, yes, okay. So just be careful. Just be careful, all right? I mean, congratulations, but be careful. Okay, I would like to reduce your risk, that's all. Hang on a second. I'm mentoring someone. Hang on. Not a Forex trader. Trying to change the world, man. Make it a better place. All right. So anyways, my WTI. Let's take a look at Goldie. Okay. And remember the trade plan. Okay, on gold, when it makes a lower low, and of course this is the old support, then you have permission to engage lower highs for a sell. Okay, and if you say, well, why the sell? Then you haven't been watching the last 3 weeks that I planned this trade. Yeah, Luis, don't join. If you don't want to join, that's cool. Okay. No, not interested. Don't join. All right, so let's go over to the dollar pairs. Okay, so I'm a bull on dollar. I'm a bear on pound and euro specifically. So we'll go back to this one set up on a monthly trade. Okay, so this is on an hourly chart, shows you, right? So we got a double top on the monthly M3, okay? Then there was a breach of the trend. You can see the short positions here. And we set this up a long time ago. Actually, we set it as it was rising. We set that area. So it was like hit the top of last week, which is only the entry for the month. So even in the beginning of the month, the plan was to sell here. So we did this in the day trading group and the swing trading group. And the target is 98. Now, of course, we got this problem with the huge psychological level coming up. Okay? But remember, it's psychological, it's not fundamental, nor is it technical. Okay? Yeah. Okay. So it could fall apart because it is psychological, right? Okay. It's not technical, it's not fundamental, but it's real. It's real. So you're going to have to make a decision on how you want to handle parity. But if you're going to do this technically, the target is 98. I can't do anything about that. Okay. Now, JK had a question about like the integration of multiple time frames. And what I teach is that you want to develop your monthly first. It's a trade plan. But your trade plan is also based on your fundamental bias, right? So again, going into this euro trade, if you don't know if you're a bull or a bear, you can't really do any of it because the pivots don't tell you direction. That's not the point. It's measuring what the market did in the last period. Okay? So it's more like if you study your fundamentals and you say you believe euro dollar is going to fall over time, then the question is, well, at what time and what price do you sell, right? So you start with that first, JK Markets. And so like in when we meet with the swing trading group, we do things like we look at monthly M3 as a bear, and we'll look at then the weeklies, and both are relevant, but they're for different time frames. A monthly M3 would dictate that you're probably going to be like, if you get short, you will probably be short for somewhere between 2 and 4 weeks. That's that. Now, you might be in a situation where you're not set up yet. You're not in the right price yet. Now, this kind of price action had to do with seasonality, really. And then things are starting to wake up, so we got our setups. Okay? So once you got your monthly strategic plan set, okay? And we knew this even in July, we knew what it was. Okay? That you would have this to this is your monthly plan. Okay, JK? So the next part is, how do you incorporate your weeklies? What are your weeklies telling you? Your weeklies here are telling you an inside week, and it was an inside week. Then the next one is an M2 to M4, which it did happen, but then notice there's the overlap of the monthly M3. So we know on a weekly basis, this means weekly bulls get out, but we knew a week earlier, even a week and a half earlier, that this was going to be the interesting price to set up the monthly. Okay, so all of this is now irrelevant. And then you drop into this, and what you're looking for are a reversal pattern at resistance. So a double top gets incorporated in there, and you can see that's why I'm short here. Okay? Now, we got to drive in even further. So why do I have this channel? Well, it's a monthly and a weekly setup, JK. So now you got to go and say, well, what's the short-term target for the longer-term trend? Well, this area where I'm actually short predicts this as the bottom, the short-term bottom. It's kind of where we hit today. So you could take profit, sure. That would be your weekly swing, but we're still inside what could develop into a monthly swing. Now, seasonality says it could. It's a tiny bit early in the season for a bigger move. Okay, August could be a tight month, an inside month, but we're not showing signs of the inside month, but it could. We don't have the volume and volatility for follow through, but we might. Okay, and so now what we're looking at here is the early target predicts a bigger pullback, and then maybe next week or later this week, we resume this trade. Okay? You following so far, JK? So then inside of all of this, you have your daily trades. And let me mark it. Monday's day trade was sell here. Tuesday's day trade was sell here. Tomorrow's day trade is sell here. But the one that we're at now, which is tomorrow's day trade, is probably negated on the short run because we essentially already achieved the weekly goal. So like, we don't need to sell tomorrow. We're already done for the week. What do you mean Wednesday? We're done. Okay? So now we're much more interested in next week. Now, this might not develop into a counter trend trade because we didn't quite hit it to the pip. So there could be one more down move and then a bit of a counter trend and then a resumption of trend. So think of it as maybe, 5 waves down, 3 wave correction, 5 waves down. I don't know if you're an Elliott wave guy. But so inside that, you got a weekly strategic plan. Okay, you have a plan for the month. So if you're a bear for the month, you wouldn't necessarily buy this. Now you could, okay? But you're actually hoping for it to come down because that's what your fundamental analysis have taught you. So, right? And then you incorporate your weekly. Now, once you get your weekly set, so you got your monthly, which is the black circle, and the weekly sets up at the double top, okay? And again, I'm short here. So now you got your weekly and your monthly in play. So now you drop from your weekly to your daily plans, and you can day trade your way down, exit, wait for it to rally up, day trade it way down, so on and so forth. Or keep building positions in that direction. Got it? But it would make no sense to day trade long if you are strategically short, because the closer you get to day trading, you're much more tactical than fundamental because you've already made your strategic fundamental plan. And now you're simply executing. Okay? It's just another, right? Like the US strategy was to clear Fallujah. But you don't come up with a new plan every time you kick down a door and clear a house. You just go to the next door, the next door, the next door, the next day, the next day, the next trade inside of the strategic plan, which is clear the city. Now, Charlie says, well, what if you're a bull? Well, it's exactly the same with the opposite tactics. Milo says that's 101, Wayne, not, and I'm referring to parity. Yeah, traders are protecting parity. Okay, bears that are not actually confident bears, they're making the decision to get out before parity because they're worried it's going to pop to the upside. Okay, well then they're not, let's say, fundamentally or even technically making the decisions. They're making emotional decisions. Is it the wrong decision? Well, I didn't say that. What I said is I have no idea. But if I analyze this fundamentally, I don't see why it can't go below parity. And then if I analyze it technically, it tells me 98. You see? So parity, that's an emotional decision around a psychological number. And they're valid because it impacts the way people behave, but I'm trying to isolate that as much as possible and saying, well, fundamentally and technically, this is down to 98 this month, maybe even lower. It adds even more noise to say, well, but, the behavioral finance on top of that is, yes, it should go to 98, but everybody's worried about, parity. So, other people are exiting at 101 and others are entering at 101 and all that kind of stuff. I'm like, well, in that case, what this chart is telling me based on what I just explained to you is that a day trader would stop selling. And in that case, too, swing traders may have also taken profit. So you have a scenario where day traders stop selling and maybe buy. Swing traders exit, which means they take their profit and the brokers put them long. So you get this upward move based on day traders suddenly going long because swing traders are taking profit, but that's why I have it going up. So now I'm talking about between, let's say, most likely Friday or Monday, those that were selling, both swing traders and day traders, are likely going to try again, unless, of course, they're freaking out about parity, which is reasonable. Okay, and the reason I know it's reasonable is that we have all this support here, right? Here and here. If you're going to use that type of support. It's valid. But if you're a trend trader, and I'm trying to teach you to be a trend trader, okay? That's this thing, the channel. Let me get rid of the channel. Come on. No, that's the wrong one again. Okay, delete that. Okay, so what this chart says technically, I'm trying to be as factual as possible, okay? It says if you sell here, then you take profit, and I'll put it next week, here. It's not my opinion. That's what it says. I'm not Mozart. I'm not writing the music. I'm a concert pianist who's practiced for 20 years, and I'm just reading the sheet music, bro. I step on the pedal when I'm supposed to. I play it in the proper key. I read the time signatures so I know how to play it. You got to read what it says, the piano forte, loud and soft. Right? Like, I didn't write that. Huh? Little Beethoven? I didn't write it. But I can play it like it was written. That's what it says. That's not my interpretation. And it could be wrong. Because I can tell you, so someone said, well, what if you're bullish on this? Okay, what it says is you're going to be buying down there near parity, and your target is 106. Not my opinion. But I can tell you, you might be a bit early. That could work out that way. Okay? But I think there's more risk in the market than there is opportunity. What do I mean by that? I've analyzed markets fundamentally. And if I was pure risk on, I would be thinking this, and then I'd be thinking that, and then I'd be thinking that. I'm not so sure. I'm not in that camp. I don't have that opinion. I have a bias. I've done my research, and I think there's a lot of risks. A lot of things can still go wrong. And I'm under the opinion currently, fundamentally, that things could go wrong, and that technically this is a right place to start executing that thought process, which I did. Now, things can change. Things will change. At some point, those risks will dissipate as we learn more information, and the world will become a better place. We'll rebuild our relationship with China. China will get past COVID. The war in the Ukraine will end. The supply of energy and the supply of food will normalize. And we'll continue building humanity. I just think right now we have some challenges to all that. And through my analysis, I say I want to own dollar and I want to sell euro. So I get to a place where I'm like, yeah, this is resistance. It's going to fall. And it did. Okay? And so now I'm like, well, I think it'll go at least to here, but it should go lower. Why? Well, that's what the technical analysis tells me. That's not my fundamental analysis of how Europe's going to, handle its energy crisis and its inflation, and is the central bank doing well, and can the central bank actually do anything? Like, those are big questions. And if things go bad, to quote U2 and Bono, right? The world will run into the arms of America. And you might say, oh, America's bad. We don't like America. America's evil. Yeah, well, you're going to buy dollars and you're going to buy treasuries because it's the best thing on the planet. You don't have to like it, but you probably need it. Wow. Look at that. Smoking hot like fire, huh? Cool. So anyways, we did a little of that. So we looked at euro, I ripped it apart, translate that across the others, you got it. One of the things I want to pick on is my pound. Okay? And we know it's probably not the right timing on a lot of these. We've isolated, like how things changed with Kiwi. Okay, we analyzed how things changed with CAD. We've analyzed how things changed with Aussie. I'm going to put this on a 4-hour. Okay, so things were very, very down, but there's rationale, at least technically, and a bit, fundamentally as well, for this up versus how down it was. Okay? And what I'm hoping to see, and hoping meaning I'm waiting, what I'm waiting to see is that, like, this pair ends up falling. But I know it's not going to fall here. See, the waiting is a fundamental. Money leaving London, going to Zurich. That would be a risk-off mode. Oh, look at me. I'm a risk-off guy right now. Cool. So is selling here the right thing? Of course not. Look at this, by the way. This is the sell. There's the monthly M3 we were talking about. And the target we had back in July was right there. Okay? That's that. Okay? I'm not pretending I'm the guru that knew all this and I'm a genius and you should just trust me. Look, this is in the training course. This is in my book I wrote 13 years ago. What you need to decide is, are you a buyer or a seller of this pair and have rationale for it? If you can't do that, you're never going to get this. See, look, and I even have it marked here. There are bulls and then there are bears. Bears sell here, bulls buy here. One of them is likely to make money. The other one is likely to break even. They bought it here, jammed their stop, and got knocked out. Boo-hoo. These guys sold it here, jammed their stop, and hit their target. They made money. Where most retail traders are making mistakes is they don't know what the hell they're doing. And I don't mean technically, I mean fundamentally. So if you're really good technically, you're probably break even. Okay? That's all. So you're a buyer, you're a seller or you're a buyer. So if you do it right, you're right. If you do it correctly, you get an opportunity to move your stop. Especially when you're here, when it's 50-50. Okay, the bulls are profitable and the bears are profitable. Think about it that way. Bulls bought, bears sold, and when we're in here, they're both profitable. It's only when you're trading in the middle that you get slaughtered like a pig. You see the pig? We have a mantra. You're a bull, you're a bear, or you're a pig. And pigs get slaughtered. And the moment of truth happens, we breach, these guys get knocked out, and it's probably the reason we hit target. Now they take profit, and now it comes up. Why? Because they got out. And if this is now going from summer doldrums into a new trend of risk off, which we don't know, that's a bias. Bias isn't a fact. It's bias is an interpretation of the facts. So if you are now risk off based on your interpretation of the facts, not opinion, facts, you add up all the facts and you say strong sell. Do you strong sell it here? No. But let's say, right? Let's say in a week or two, or even later this week, we're up at this price. And then it does a reversal pattern. Sell it. Because you have a strong sell bias. You're at resistance. It did a reversal pattern. Get on it, boy. Get her done. What are you waiting for? Okay? So, I'm going to hurry up and wait. By the way, this is an epic, beautiful, textbook swing trade. And there were several that have already happened and hit targets this month. This isn't like one lucky one. There are several that were just as good. Perfect top, perfect bottom. And it tells me there's logic in this market. And if there's logic, maybe they're thinking the same. Maybe here, maybe here. In the next week or two, we get short this. Okay? Okay. David, you've been told to stay away from breakouts? It's interesting. I don't know why. Like if you're going to do a price action strategy, you could use a template design for that, or set a chart setup for that. Okay. And you can see all these little lines are showing you swing lows. And it's just a visual representation, so you get better at doing things like identifying what support is. So I'm just mechanically doing this now. There's another one in there. Let's see if I can, no, I couldn't even fit it in there. Let's see if I can do one more try. There we go. We'll do this one. Do that one. Okay. So when you're down in this zone, does that look like a good buying opportunity? No. So you can do the same to the upside, and you can start connecting the upsides. And what you'll see, like in the short run here, the shorter one, I'll use yellow just to have this stand out. What used to be green then became red. See all these reds? And so a breakout strategy, I love breakout strategies, okay? Okay, anyways, you get the breakout, higher high, higher low. You just have to be cognizant that you're at support. If you have no idea you're at support, then you're not going to anticipate the breakout, you won't recognize the breakout, and you won't set up the higher low. What most people, I think, are taught, now you correct me if I'm wrong, okay, but there was a time when traders were taught to trade the breakout up in here. Okay? For almost 20 years, I've been teaching people to buy the higher low after the bullish breakout. Okay? So that's just pound Swissy, right? And just the one we happen to be looking at. Cool. Every time it makes a higher high, analyze and find the higher low. So if dollar's weak today, you can do an exotics trade, but I find them a little bit dangerous. This one, once again, here's another example. Oops. Monthly M3, monthly M1. Okay, we almost hit it. Almost. It wasn't perfect. It was 98% perfect. Well, forget it then. Okay. This one says it could have another leg down for Rand. Okay. So we had a lower low, so you want to set up a lower high. And if the dollar is weak today, you'll be able to try to take this down and hit your target. Okay, why is that the target? Okay, well, you can see I have it here. This is another great example of this is where bulls buy, this is where bears sell. So we have the top last month, then we drop into the buying zone for bulls, so they bought it. Okay, and they were thinking this. Perfect trade. Bears were waiting because they're like, well, we just kicked off a top, so now we're going to sell, and they're thinking this. So bears are more correct so far. Now, could it pop back up and go the other way and do some other things? Yeah, but that now you're just chasing the noise. The strategic plan was red versus pink, bull versus bear. These are pre-known places in which they will participate. Bulls will buy there. It's predefined. Read the frickin' book. I printed it on paper 13 years ago or something crazy like that, which means years before that, I was trading this way. So I look at it and like, well, if there are bulls, which I don't know, they would buy it there because that would be the correct price. And if there are bears, which I don't know, they will sell it here. And they did. We got the lower low. So now that we're back, we call that a role reversal. And if there are still bears, then they will try selling it. And if there are not bears, they won't sell it. So I don't know. But that's the strategic plan. I know what they're thinking. I know what they're trying to do. Okay? And the rest is overcomplication. And if it pops up, you'll get stopped out maybe for profit, maybe at break even, maybe for a small loss. MoveOn.com. Okay. What do you stink? Smell like a plan? Let's do one more and then we'll call it a day. What currency pair or commodity would you like me to cover? Oil? Oil? CAD? NASI? I can do S&P, but not NASI. Well, maybe I can, but whatever. The thing is, Real Estate Tycoon, I'm a macro guy. So if you ask me like NASI, I'm going to say, well, fundamentally the same as S&P 500. Beast. Bitcoin. Bitcoin's a good one. Beast. We got three beasties. The thing with the yen pairs is I'm more concerned about yield curve control than I am about the sort of the basic fundamentals. In my opinion, the basic fundamentals are overwritten by yield curve control. Tell you what, I'll do oil and Bitcoin, and then we'll enjoy the day. Okay, currently we're in an upward move. However, we're failing. Okay, we have a slowing uptrend. So you can imagine a MACD falling if you're going to use a MACD. Okay? What we have is a pattern that should be doing something like this. And every higher high is kind of, I guess the higher highs are not very much higher than the previous one, but it seems to me the pullbacks are getting bigger. So the risk here is the slope of the mean. Okay? So y equals mx plus b. Okay? And m is equal to the rise over the run. And this is what I'm looking at, the slope of the mean. And we were here, and it feels like, now I might be wrong, it's too early, but, okay, that, we get something like this, which I would call 100% retracement from the old bottom. So let me mark that. So if I'm not analyzing a slope, if I'm analyzing a flat bottom here, flat bottom, if I can draw it flat, okay, then that would change the slope of the mean. And then that would resurrect the old top, because now we're not trending, we're range bound. You see the logic? And the range, how you trade a range looks more like this. Carpe mundo, Jordan. Right, real estate tycoon. The way to describe that is it has a higher beta than the S&P. Yeah, and nobody cares about the Dow. All right. Okay, so my concern here is that the slope of the mean is flattening. So over the next day or two, if it does flatten, I would move from an uptrend strategy to a range-bound strategy. And now on top of this, so my bias, not my fundamental bias, but my mental bias, is that my fundamental bias is down, is risk off. So if my fundamental bias is correct, it will come down. Therefore, it's probably impacting the way I'm looking at this. So this isn't if it reverses, then it'll look like that. Someone else that's still bullish on this will say, well, Wayne, this really doesn't seem to be flattening. It seems like we're, within 2 standard deviations of the mean. The mean is still positive, right? M is a positive integer. So once we get down to 121.50, price will rise again. Because remember, we're predicting the future. I don't know the future. So someone else is going to look at it like this, that it's going to turn north again, and probably around that 2150 line. Is it 2150 or 2350? I'm sorry, 2350. 23 maybe? Seems like 23 is too low, so 23,500 maybe? That kind of thing. So I would say, okay, that's cool. But the way I'm using this is as a canary in a coal mine. This is a way of looking at, is the world taking risk? Okay. Okay. So for me, it's if, then. So if this rolls over, it will tell me risk off is in play, and I would be buying the US dollar. Now, I could sell Bitcoin and trade it for dollar, but I'll probably be on pound and euro dollar. Okay. Okay. One of the things I like to do with oil, now that the market is open, I like to recognize the top and I like to recognize the bottom. Okay. Look for a change in direction. So like yesterday, the market opened here, so I'd mark that. Then it spiked up, hit here. Okay. Breaks the upside, which is bullish. Makes a higher low, which is bullish. Notice how we got trapped in here for a while, which is that range. Not the upper range, the range of the open. Okay. So now it'd be interesting to see that's sort of a secondary or tertiary line of price of interest. Okay. On the hourly chart, you'll see we hit a moving average, which is bearish. So bear is definitely going to play it that way, right? You see this? Moving average. Okay. Well, obviously, that's a bearish entry. And you're like, well, what do you mean, obviously? All right, well, there's a moving average. And we're below the moving average. Why do we use moving averages? Dynamic levels of resistance when you're below it. So a bear is simply thinking like, yeah, kick it off there. Kick it off, right? Simple. It's harder to be a bull. So everybody knows I am a bull. And for days now, I've been just saying, look, I have to have the strength to wait. I have to have the patience and discipline to wait. I want to buy it. I'm biting at chomping at the bit to buy this. But I'm not ready. So right now, someone else had a plan. And their plan was there to there to there. Right? You got that, right? Is your plan more complicated? Okay. What are all these lines up here? This is when I planned it. Even up here, I was a bull. But I'm like, but dude, look at all the resistance. Look at all the selling pressure that is almost certainly up there. I really want to buy it. So when I said up there is what I want to buy it, but what I'm looking for, what I need before I can buy it, is I said, I hope there's a double bottom. You can't see it, but obviously there's one to the left. Okay? So then I take it further. This is the right of the bottom. So now it'd be great if I can get a higher high, higher low scenario. So now I'm in like the fourth stage of my plan. Wouldn't that be cool if it ended up doing this? Then I'd have my, oops, that was supposed to be a higher high, not a higher low. Put it back, right? Higher high. And what would that moving average look like in that scenario? La 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 la. Okay? La 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 la. So what would we do in the next piece? Once I got my higher high, drop it into the moving average and take it north. Oh my Lord, isn't that beautiful? Isn't that just beautiful? Okay. Is it going to happen? I don't know. Does that make me a fool? No, it'd make me a fool if I told you I did know. Okay? You're right. So that's how you should think about trading and how you should plan your trades. Okay? That's a 55. Okay. Yeah. I love them all. They're all my babies, Real Estate Tycoon. Okay. So that's how to be a Forex trader according to Wayne. There are many strategies out there, but this one is mine. So peace on earth, may the pips be with you, may our profits be above average. Maybe subscribe so I can get rich. If you subscribe to YouTube, I'll make over $100 a month. It's going to be great. I'm going to get rich. Just need more eyeballs. Man, if I double my views, I can make $200 a month. Oh my God. Right? Don't join FX Bootcamp if you think I'm doing FX Bootcamp so I can get rich at $88 a year. If that worries you, don't join. You're not ready. You're not even going to be happy. There's no way. If you're in a mindset like that, I can't help you. You've been burned. You've been lied to. You've been abused. I'm not your bartender. I'm not your priest. I'm not your psychologist. You're going to have to work on those yourself. But if you're ready to learn, roll up your sleeves, and most importantly, to do the work. I can tell you most people watch the 65 hours probably 2 or 3 times. And you're like, 2 or 3 times, I could never do it. Then don't do it. Yeah, my secret plan exposed. Okay. So anyways, if you're ready, man, I've been here for 20 years every day because I'm trying to show you work ethic and discipline is a key component of success. And the information is out there. There is a process. You don't have to reinvent the wheel. But by all means, go ahead. Right? It's a free world in most places anyways. Free country. Yeah. Yeah, my secret signal service, is that right? So, like I said, let me do it one more time. It never hurts. Peace on earth. May the pips be with you. May our profits be above average. Have a wonderful day. See you tonight if you're in my day trading group. Cheers. Ciao.